Crude prices sliding this week, dipping below that $68 level as the market focuses on expectation of higher supplies coming from Saudi Arabia and other OPEC nations. Joining us right now is Dan Yergin. He's S&P Global Vice Chairman. And Dan, I have to say, it's kind of stunning to see WTI below $70 a barrel when you've got all of these hot spots in the Middle East and when you have China trying to do its best to stimulate demand this week. I'm shocked at the direction of oil prices.
Well, they certainly have come down, and it has been dominated by, in fact, the weakness in the Chinese economy. And the interest rate cuts and the liquidity are just beginning. But it is amazing to see that you have this kind of geopolitical turmoil. War doesn't affect the price, and that's because there's been no disruption. There's still over 5 million barrels a day of shut-in capacity in the Middle East.
Do you not worry about disruption yourself?
Oh, I do. I mean, as we see this war progress on the northern front in Israel and Lebanon, if it somehow involved Iran, involved the Gulf, and there was a disruption, we'd see a change quickly. But I think the difference now is that the oil market doesn't preemptively price in risk. It looks to see if actually there is a disruption.
Does that make sense to you?
I think it does, because that's the experience really since 2019. And I think the other big change is that you have this huge cushion called U.S. production that wasn't there in the past.
That adds up to a lot of pressure for the Saudis, probably in particular. How do they feel about oil falling below $70?
Well, of course, Brent hasn't fallen below 70 yet, but I think we've seen that they were defending 100. I think that was the price that the IMF came up with. But I think the Saudis are very focused, as the other producers, on not having that Brent price go below $70. And that's why I think some of the statements that the Saudis put out this weekend telling other people who belong to OPEC Plus, you better comply, because otherwise we can put more oil into the market too.
Would they do that? It's amazing to think of OPEC turning against itself. It always used to be OPEC would put pressure on U.S. and other producers. Now OPEC's going to put pressure on itself? Well,
on OPEC Plus, on these countries that are overproducing, the Saudis say, we've made these voluntary cuts, you're overproducing. And they're still saying that that OPEC Plus is going to start putting oil back in the market actually in December. But I think that will be very much governed by what's happening with market conditions.
I mean, not that you're a geopolitical expert, but when you look at the region, I mean, it's something you know well. It's something you've studied, because it does have major impacts on prices for fossil fuels. What do you think? What do you think is held off at this point? How do you figure it out? Because we're asking everybody this, from the UN guests who have been here all this week, too. What is this different this time with the Israeli conflict?
Well, I think it is different. Obviously, Gaza was a thing that they were not prepared for. They've been very prepared for conflict with Hezbollah, which, after all, is the crown jewel for Iran. And I think that one message that has come through is that Iran itself is not ready for a war, because it doesn't have the air defense systems to protect itself. And so I think that's something that's kind of holding back. There's no question, though, that this is a highly dangerous situation, and it could change in a day.
Let's talk about what we've seen, not just with China, but with other central banks also cutting rates to try and stimulate demand. How quickly do you think that will pick up? What kind of an impact will that have?
Well, I think obviously what happened in China, I mean, the thing that's dominated the market is the weakness in China, because China, half the growth in world oil demand over a number of years has simply been in China, and it hasn't been happening. So I think the big question is stimulus. Will you see a recovery in China, or is the shape of demand in China changed? And I think that's what the market is struggling with.
So where do you put oil prices in the next 6 months?
Well, I think that's probably, I mean, I would say, first of all, going back to your question, it really depends what happens geopolitically, because, we're on the edge, and if we fall over, otherwise I think kind of oil prices stay in a kind of above a $70, $80 range, not the $100 that was out there when all those bullish estimates.